Hello everyone, hope you guys are doing great. So in my today's video, I'll talk to you about MCX, their recent results for Q3 FY26 and the con call summary. But before we get into that, I'll just take a few seconds talking about what do they actually do, right? So they are India's largest commodity derivative exchange. So they operate as a market place for commodity trading. So they don't actually sell or buy commodities themselves, but they provide a digital marketplace where a willing buyer and a seller, they come together and get into an agreement. And at the back of this agreement, for every agreement, there's a fees that our company charge, and that's how they earn their revenue. So, and if you look at if you divide the fees that they charge, so first is their transaction fees, which I said earlier, it's at the back of the trade that gets agreed, and that is their main source of income. And then the secondary sources of income are like terminal charges, which are charged to their member brokers, and for them, a subscription and a annual membership fee is also charged so that they're able to maintain their status. Then they have something called as data feed charges, which they charge to news channels, data vendors, and to financial institution who wants this information from them. And the last thing is warehousing storage fees, which is charged at the back of the actual delivery at the back of this contract if it happens, or otherwise the contract just closes at the end of it. So let's look at their recent results. So if you look at their Q3 FY26 result, their revenue grew by 121% to 666 crores, and their net profit grew by 151% to 451 crores. So I mean, it's just amazing numbers. Not only their revenue grew by three digit, but on top of that, they got operating leverage. So let's look at this. What was the main reason for this growth? So the main reason for this growth was their increase in their average daily turnover. So last year, the average daily turnover was around 2 lakh crores, and this quarter for this year had around 7.5 lakh crores, which is almost 220% increase. And the major volume was contributed by the Bullion segment, which is related to gold, and which accounted to around 69% of the average daily turnover. And this happened obviously because of the volatility and the things which are news going around in the back of it. At the top of this, MCX launched new products like Gold Mini and Silver monthly options. And if you look at their revenue split, options contributed to around 58%, which was around 380 crores, and futures contributed around 43% to 227 crores. And the other thing that they saw is they saw a significant jump in traded of unique client codes. So what the management said about this is like because they have improved their platform, more and more people are coming in trading, and there are new members who are onboarding on the platform. And at the same time, another good news that they shared is like the institutional interest is coming back. So especially from foreign portfolio investors. So that which is a good sign in terms of technology and scalability. Management has clearly said that they are currently equipped to handle the 3x and 4x of the volume which they're currently handling. And their target is to improve their platform so much that they can handle 10x of the current volumes. And they're going to continuously invest in the platform so that it grows and it doesn't lag back. So management is quite confident about the growth and they say it will continue. But at the same time, they told certain risk or how to say something needs to be cautious. First is competition. When the question was asked about it, so the management clearly says the competition is real because they are the only one. So if anyone who comes and opens another platform, so there could be some reduction in the volumes. And the second thing that they said is regulatory dependency. We need to understand they're working in a financial market regulated by SEBI. So if any regulation which comes by the SEBI, which is not that favorable to the exchange, might have an impact on their overall volume. And the last thing is that they said we need to take into consideration the volatility baseline. Because currently, because of the high volatility which is happening because of all the external reasons, the volumes have increased because people might be panicking and they want to get into a contract right now for futures. But once things get normal, then the numbers would stabilize and the growth would come to a normal number. So management said that we need to take that into consideration. So this was the overall summary, the company is doing quite good, and especially with all the volatility which is happening, it is actually benefiting the company. So if you look at the other companies which are being hit negatively, but MCX is on the opposite side. So let's keep a track on the business and let's see how do they do. So if you like this video, please do subscribe to my channel. Thank you and God bless you.